first of all, what exactly is the role of Nexo? What is a crypto lender?
A crypto lender is a financial institution that provides banking services to the blockchain space. Our two main products are the crypto-backed loans, meaning you can take out a loan against something such as Bitcoin staked as collateral, which has been great with the current bull run because you tap into the wealth, your crypto wealth, without actually having to sell your crypto. And then the second product is the earned interest product, which in this low interest environment where the Bank of England this morning announces that we should brace ourselves for negative interest rates, we are in a position to pay you up to 12% per year in interest.
Antoni, I guess the concern is that, if you look at crypto-based companies, they've always struggled to bridge to the other side, to banking services, I think as a result of some of the crypto uncertainty, because concerns of like money laundering. How do you actually bridge this gap? Well,
we are a company that tries to do exactly that, to bridge this gap. We are from a very traditional, regulated background. We have been in fintech before the term has even been coined. And truth be told, it's getting easier, with signs from the Department of the Treasury via the OCC, where banks in the US can now custody Bitcoin, with some of the more traditional companies, such as PayPal, allowing exposure to crypto. The gap between the two is slowly being bridged in a natural way, and there are on and off ramps to crypto and fiat, vice versa. So, it has been an incredible year.
Do customers who leave deposits with you enjoy the same protection as High Street? So is there a government deposit guarantee in place?
Not at this stage, although we are working on a bank acquisition, actually two bank acquisitions, one in the US and one in Europe, which will bump up the protections that investors have. Our protection is that we have a business model that actually makes sense. We are deleveraging the system in terms of the loans that we extend are secured by 100%. So for you to take 50K as a loan, somebody on the other side has put in collateral that is 100%, so double that, 100K, and it is, I would argue, a much better and more natural protection, because the business model protects you, and it goes beyond the regulatory guarantee of just 100K or 200K, depending on where you are. It is the fundamentally sound business model and the lack of mystery of where the money that is coming from that gives you this protection.
Yeah, the problem, Antoni, is that I guess it's so volatile, right? The problem is the stability. Do you have worries at some point that actually you're less stable as a lender because you use this collateral, but actually, Bitcoin can go from like 5 to 300,000, and you don't really understand the underlying demand behind it?
Well, crypto is volatile, and volatility is here to stay, but that is one of the reasons its inherent volatility that we're having this conversation right now. That's why we have the deleveraging process. We have very efficient mechanisms at Nexo which ensure that the loan-to-value ratios remain as they should at all times. And we have been in the market since early 2018, which saw a year of Bitcoin declining 86%, and we still managed to make money, and none of us as a company and our clients lost any money. So this is the stress testing in a way that I don't think a traditional bank has been stress tested.
Yeah, who regulates you, and what are your reserve requirements?
Well, we are a global enterprise. We are operating in any jurisdiction apart from the sanctioned countries. So this varies from country to country. We are regulated as a financial institution. In Estonia, we have various consumer lending licenses. In the US, we are pending authorization by the FSA in London. So it really depends on the jurisdiction and where you're based. In Switzerland, we are part of a self-regulatory organization. So it is quite an endeavor on that front, but the team is great and we have some successes.
I guess it's just, I'm just trying to figure out the reserve requirements because it's a very different business model than you have to some of the other lenders. So can you give us an indication? Is it different from country to country, how much you need in terms of reserve requirements? Or is it something that you go across the board?
Well, it is not, we don't have strict reserve requirements like you would have for fractional reserve banking in the banking sector, like what you traditionally would have in place. But we have excess of liquidity, the assets and that we have, and due to the under-leveraging of the system, we have more than capital adequacy, and it exceeds all liabilities. But there are no strict rules as you would have in the banking sector set in stone and that the regulator would look at right now.